So welcome everyone to the third day of my 4-day live trade execution webinar series, in which, really I'm trying to share my mindset and how I use the patterns and price action in the markets to deduce kind of major trajectories, some even smaller. But what I'm trying to do is get some kind of thrust from one level to the other. And then, obviously calculate your risk. I'm going to talk a little bit about risk today. I think that's probably a subject that is not talked about enough. Everybody really romanticizes entry and says, only if I have the best system to get me in the euro at the right time. And, guess what? There is no such thing. The secret is being disciplined and using risk management, and then have a methodology that has an edge. But it really comes down to the discipline and the risk management. I always make the analogy to diet and exercise, right? So you could exercise all day long, but if you're eating pancakes and pizza all day, the chickens will come home to roost. You're not going to get your results. So you can, romanticize how to find the best system to get in at the right time. There is no such thing. But it's all about, calculating risk and reward. A couple of nights ago, I was very ambivalent about a setup in the Euro New Zealand, had a buy stop in there. And today the stop loss got triggered. Guess what? I and any of the members that followed me, we lost 0.5% of our account. So you don't have to worry about losses. Losses are, it's kind of like in the restaurant business, it's just the cost of doing business. If you're in the restaurant business and you order veal for 50 people and 35 people, show up and you got to throw the rest out, that's just the way it is. That's the cost of doing business. And what I try and do is find, just several trades a year that then just account for my whole year. So the Euro New Zealand or the Pound New Zealand, or, some of these smaller trades that, you try here and there. I've had 3 monster trades already this year. Typically, I look for, 1 to 2. So at the end of January, I started buying Lyft, the shares of Lyft, and made several $100,000 doing that. And then about 2 months ago, I saw a setup in the NASDAQ where I started buying these put options to bet on the decline in the NASDAQ. And I made 7 figures in that. And all during that time, I've been short gold from 1900 to 1700 and took many hundreds of thousands of dollars out of there. So those 3 trades, they're good for, a while. And so in between, the markets now are, getting more difficult. We're going through every day you see in the stock market, this rotation, so the indexes aren't really coming down, but what's happening is that you're getting a huge internal rotation. One day it's growth, the next day it's, momentum, the next day it's value. So, yesterday the NASDAQ was up and the Dow was down. Today the Dow is up and the NASDAQ's down. And so you're just seeing this giant internal rotation. And so now, the easy money's been made, right? So if you're in the stock market, all you have to do is close your eyes for the last 12 months, buy anything, any tech stock, and you made a lot of money. Now, the rubber's going to hit the road, and it's going to really flush out those who know what they're doing. And I think it's going to be a very challenging environment. But for me, I welcome that, because it's most people, certainly in the stock market, look at buying, going long. I love going short. To me, gravity works. Markets come down faster than they go up. So if the market starts coming off, which I think it's going to, I'll look at, buying put options. I'll be looking at shorting stocks. And I think, what I want to, I'm trying to think how to crystallize, what I want to share with you, because there's, millions of, setups out there. But what I want to do is contrast kind of what I call a clean setup with maybe a not so clean setup. So I guess what I'm going to do is start off by looking at QuantumScape. I've been talking about this all week, and just to show you, that I bet on, the same things that I talk to you guys about. Sorry, this is a trade. And so, hang on, I'm just trying to share some of my open positions. I really don't have a lot going on in the market right now, just because you've got this giant churn. But I just thought I'd share with you, some of my positions. So a couple days I opened up these put options on the stock QuantumScape. I think I've been talking about QuantumScape to you all week. And actually, I try to sell a lot of shares on the close, and my broker didn't have them, so I've got to do that tomorrow. So I'm going to actually go short the stock, and I'll show you why. So I bought these put options. One was the 40 series, and the one was 41. So the stock had to, decline, and the stock was trading about 42 when I put these things on. I think today it closed a hair under 41, and I've only got 2 days for these things before they expire. So I'm going to have to, see how they're doing. They were 50%. So I was losing $5,000 this morning. My $10,000 cost was cut in half. It was really, it was cut down to 5,000, and then the stock put on a move, and it went from 5,000 to 15,000. And so that's, options work very, very quickly. So you can see I bet 10,000 here, and I'm up 5,000, so I'm up 52% on my bet so far, and I'm hoping tomorrow it'll go deeper. The more the stock goes down now that I have the 41 calls, this is going to be in the money. So it's kind of a relatively small bet, and then I just bought 1,000 shares of Lyft and 2,000 shares of WRK, and kind of a nothing day for me. I mean, believe me, my positions are usually much higher than this. It's just that we've just got such churn. I'm just kind of waiting to see what's going on. But the one stock that I really, really like, and I want to kind of contrast it. So it's all about finding setups, long or short. No matter what the market environment is, it's finding setups where you can establish, an understanding of what's going on that chart, and where and how to, get involved in terms of, what is a risk reward, scenario. And so, all this week I was talking to you about QuantumScape, and I think, yeah, that looks pretty good. The whole history of this stock, I mean, I guess it went, IPO, initial public offering here. Like most IPOs, it soared initially, and then for the life of the IPO, it's really been, tracing out this bear price pattern. So to me, when I look at a chart, like Lyft, where I saw the double bottom, certain things are just very clear. So there's a lot of muddied stuff out there. We can, trade a lot of stuff, but I'm going to contrast what I see. Like, this is just a clear a clear path to make money with no obstructions. And what I mean by no obstructions is that where we're trading right now, if we start getting underneath here, there's literally no obstruction. This is just, got open path. The obstruction goes all the way here. And I guess that's, I got to be carefully choose my words, because I know what obstruction means, but I know, I know that you won't. And so, sometimes I try to explain what I see viscerally, and I realize I struggle to do that. So just, hang with me a little bit here. But to me, this is a go to the bank trade. Now, the difficulty is that most people don't know how to short a stock or understand, to do so, and they're afraid to do so. And I understand that. So I think a lot of the opportunities now, if the market's going to, start being a struggle, there are going to be a lot of opportunities on the downside. Now, if you're trading the FX market, it's as easy to sell the euro yen as it is to buy it. And it actually is in stocks, because you don't have to do anything. Your broker, does it for you. But effectively, behind the scenes, you're borrowing. Your broker is lending the stock to you. You're borrowing it. You have to pay a fee for it. And then, when you cover it back, you buy it back in. So your broker either has it, or if he doesn't have, and so I try to sell a whole bunch of shares on the close, and my broker said it wasn't on the easy to borrow list. So And whenever I'm looking at shorting a stock, I kind of see that my broker has it. And if they don't have it, you just call up the broker and say that I want to short QuantumScape, and then they go get it from the clearing house. So they're going to have to do that for me tomorrow. So before the opening tomorrow, I'm going to, have them put QuantumScape on the easy to borrow list. And I'm going to probably short anywhere from 25 to 50,000 of this thing, because I can't see that there's any risk anymore. So what I'm looking at, that I shared with you earlier in the week, is that this started out right away with this bear price pattern, this head and shoulders price pattern. So right out of the gate, it soared higher, made this peak, but when you look at it, it's got what looks like a man or woman's head and shoulders. And this is effectively the neckline. And once it kind of got under the neckline, that kind of confirmed this bear price pattern. Now, very often, things will take off through the neckline, they'll re-challenge the neckline, and now you can see that we're well below here. So the whole, history of this stock has been a drift lower, where you can see these patterns, this double top, this head and shoulders. So this whole thing is a top pattern, is a bear price pattern. And so it's kind of like this whole thing is sitting on, these two levels of support. It's like a two-legged stool. Eventually it's just going to tip over. So you have all of this price action with nothing to defend it. It's kind of like having 3 sumo wrestlers on one side of a tug of war and like 3 Girl Scouts on the other. Eventually this whole thing is just going to collapse. And so this thing is just sitting on a ledge, literally waiting to go off a cliff, metaphorically and every which way. So you can see that we're sitting on this ledge, like a lot of these stocks are. Zoom got to this ledge and a bunch of them challenged them, but QuantumScape has just been the weakest. It just didn't, Zoom had a bit of a flurry yesterday, where I said yesterday, I can't see any risk here. And even though we went higher, we traded a little bit higher today, about $1.50. By the end of the day, it collapsed. It was what I call an outside reversal. So you can see that the high and the low was outside the high and low of the previous day. So it went outside the high, went outside the low, and so it's kind of called an outside key reversal. But whatever you want to call it, this thing is pointing in the direction it wants to go. This whole pattern, the double top, the head and shoulders, this whole thing is, there's no mystery in this thing. Now there's virtually no risk in this thing. I shouldn't say that. It's a very reckless thing to say, but sometimes we see certain things that are so favorable that, and so this is a phenomenal setup. Once it kind of gets under this level, which is just a hair below where we are, there's nothing but air. There's nothing but quicksand under this thing. So I bet you if we got back here, 6 to 9 months from now, this thing would be 50% lower. And you can actually measure. I mean, if you take a measurement from the bottom of this pattern, which was, call it, 51 to 132, that's 80. So if you, subtract 80 from the neckline, I mean, you're basically at 0. So this thing, I think, is just, I wouldn't be surprised to see this thing trade between 10 and 20 bucks at some point. So, I bet on things long, short, whatever the situation demands. And so you may not have done it before. It sounds mysterious. You do pay a cost, an extra cost to your broker for being able to do this. But so what? If you can make 50% on your money in a couple of weeks, what's 3%? So QuantumScape. And so what I wanted to do is kind of just share with you that QuantumScape is at a point where there's kind of no history to stop it. So sometimes I'll show you Zoom, where I think Zoom is going to go lower, but you got all the history and clutter to the to the side of it that it's got to kind of find its way through. I think Zoom will and Peloton. So this is just a contrast where, and again, some of this is so nuanced. I have such a hard time explaining it, where I see a short on Peloton, but to me, it's a more difficult short. I mean, I would still short Peloton, but something like this is just like, it's like go to the bank. It's like there's no obstruction left. There's almost no risk left in this thing. And, all of the obstruction here is about to be taken out. And then there's nothing, there's just literally nothing underneath it. It's like what I talk about in gold. What I mean by obstruction is that, gold, we see this double bottom on gold, and I'll go to gold. But the problem is we see all of this previous history, this heavy previous history that gold has literally got to cut through in order for me to envisage that there's going to be a sustainable rally. So this is really what I've been talking about all week, is that I try and look for setups where I can see a path to some kind of, opportunity. Now, some paths are different, where you see an FX thing where maybe I'll just see a quick, move where I can take 150 pips, or something like this where I just think this whole thing is just going to collapse and I can sit in this thing for, days and weeks, and there's literally no obstruction. So when I talk about the word obstruction, I know it's pretty, obscure term, but there's just nothing in the path to stop this thing from going in its prescribed direction. Where gold may go higher, but there's so much clutter to the left of it that it's got to kind of make its way through. And so it's a more difficult trade. Same with Euro New Zealand. When I was, talking about both those trades, I was kind of like, yeah, it's like, let's see if they kind of work. Where this is like, to me, there's just no mystery or not a whole lot of risk. And so ideally, we probably should just wait for these kind of trades. But in between, while the market's setting up, it took, a long time for this thing to kind of flesh it out, and just go through its motions. And now it's gone through all of its motions. And, now it's just really at a moment of truth. And there's just nothing to hold it up. So it's not like, I'm here, maybe you'll bounce, maybe this is it. It's not like this is what I feel like my risk could be. So whatever the news that's going to come out of this company, whatever the news of the Federal Reserve. So people say, do you follow the news? Do you look at the news? Do you listen to Jay Powell? Whatever they say is not going to affect, sorry about that. Let me just turn this down. Nothing is going to affect. So price is the news. So when I say this has incorporated the totality of buyers and sellers over a period of time, and the collective decision-making of those buyers and sellers are being revealed in the price. And so there is no surprise that is going to stop this from going in its prescribed direction. So you could have some news come out of it, and there's just nothing. There's, and that's the beauty of looking at patterns, is that, it's, again, I'm trying to find how I kind of say certain things. So it's just basically incorporated every portion of risk along the way. So whatever the NASDAQ's going to do, whatever is going to happen with, Joe Biden and stimulus, this is, this pattern has incorporated all of that calculus. And it's, understanding what the background of the company is, what the future potential of the company is, what the future cash flows are worth. And it's all being discounted in terms of this picture. And so this is all you really need to look at. You don't need to look at, any kind of, volume signals or moving averages or, MACD. So there are no indicators. This is just purely price and time. And I realize every time I take the capture, I don't put the time on here because the time is under the volume, and I don't look at that. So, but frankly, I don't need to. I just could look at this chart in a vacuum, and I'm going to put a lot of money on this thing because I don't really feel like I have a lot of risk. So I put my toe in the water, start buying some put options just to see what this felt like. And now, I'm going to kind of, unload on this thing. So this is where, there's just no price history here. And now I'll contrast Zoom, which, I've told you all week, I think is going, much, much lower. There's nowhere for this thing to go but lower. Yesterday we had this, brief short covering rally. So let me incorporate the time here just so some of you. So you can see while, so there's a, huge key reversal here where we made a new high today and we close on the low. And I do feel that Zoom is going there. But right now, unlike QuantumScape, which is in, relative terms, so QuantumScape is sitting right here on relative terms. And by tomorrow, maybe that's what Zoom will do. But it's got to somehow get through. And what I mean by obstruction is that, you've got some history here. If you fall, you've got to clear through some of this history. And, it's to me, it's not a question of, if, but when, it does that. And, this to me, like QuantumScape, is, kind of a go to the bank trade where, all of the patterns have been staked out. And it's not to say that we can't have some short covering rally like we had yesterday. And I actually anticipated that. So you have the double top and the head and shoulders here. So the double top, and then this is the head and shoulders. And so to me, this is the governing price pattern. This will govern or dictate the future price movements. So to me, not a shock that we collapsed today, because this thing is going to collapse. This thing is not too far away from its own shelf that it's sitting on. So this 300 to 310, the next time we, this thing pokes its nose down here, there's nothing to stop this. There is no obstruction, other than a long ways away. So there's nothing in the recent history to stop this thing from falling. And so I think you'll just see a total collapse of this stock. You have all of these bear price patterns. Now, I think when we met each other a few days ago, I shared with you that, we were in this kind of descending pattern. And, I said, I could see this thing coming out of here in some kind of short covering rally. And today, this is what I call a bull trap. Because if you chase that breakout yesterday, now you're trapped. And now if this thing re-enters the atmosphere of this triangle, then I think it's just a kind of a matter of time before we're going to look like that. So I just look at patterns and price action to anticipate, a future trajectory, where I'm not looking to make just, $3 here and $5 there. I think we're trading at 330 in Zoom, and perhaps a couple of weeks from now, we could be at 275. And, probably a lot lower. I mean, again, a measurement from this neckline from 330 to the top at around 588 is what, 250. Take 3/4 of that, and so shave $200 off this, and you're down to $100 on this stock. I know it sounds crazy prediction now, but stranger things have happened. I think this thing is, just going to get the stocking stuffed out of it. So, but, I just wanted to contrast that QuantumScape is already sitting on this breakout ledge, where Zoom and Peloton, still have to cut through some price action. I think they'll do that. It's just, so Peloton is, another stock that I think is going to, but this is why, to me, QuantumScape is just such a laydown, because it's ready to go. Where these stocks, they can still bang around in these ranges. So it feels very much like this double top head and shoulders looks very unconventional. That is your governing price pattern. That's going to govern or dictate, prices going forward. And so, you've come to this giant resistance level, and I have a feeling, you're not going to see it go above there. So you kind of have this, what appears to be this double top, pierce below the 115 is kind of the neckline of this double top. And then it's got to, kind of come down and cut through all of this history. So a little bit more complicated. It's pretty far from a breakout. But, I think it will get there. So, in relative terms, again, what I'm trying to point out is that QuantumScape is already mature in terms of its pattern. So Peloton kind of has to get all the way down here, to be a breakout to the downside. So not as clean. It's PTON. Yeah, sorry, I cut it off. Somebody just said I can't see the whole. So it's PTON. I am sorry. I don't take the whole image. So Peloton. So this is, again, to me, QuantumScape is so much easier. I think that Peloton is going to come down, but it's going to come down in fits and starts because it's got to get through this history. You guys understand the distinction of what I'm trying to say, even though I'm not saying it very well? You understand kind of having to clear history, get through certain clutter to get where you need to go. So that to me is a very important thing because, even with pound New Zealand, I thought I saw it higher, but it had to go through a lot of crap to get there. And now even to go lower, even if you imagine pound New Zealand is going to go lower, now you got to imagine that it's got to go through a lot of stuff to go where it's going to go. So when trades like that are cluttered, they can go kind of almost anywhere. And that's basically what you're seeing. But certain trades are just clean, where it's just ready to go. The pattern is mature and it's ready to go. Like when I saw lift at 45, it had the double bottom, it had another interim double bottom, and it was just clear to go to the next level. Even though I saw, reversal yesterday, it had to, clear through about a bunch of clutter. So this is what we saw, so let me just do this so I don't cut off the ticker symbol. And this is what we saw today. Even though I think lift is going to go higher, it's got to clear through a lot of crap to get there. I think it will do that, but you can see today that it was, really choppy. It was really higher way in the morning and then, came right back because, and I said this to myself, even though I saw the key reversal here, I said, you've got to clear through all of this underbrush in order to get there. Now, I think it will get there, but you can see it's just, this is what I mean by obstruction, where, I need to see something where, I think this will get there. These key reversals here feel like it, but I also feel like we're at the, cusp of the, the NASDAQ and the stock market's really hitting a meaningful top here. So that's been my struggle with stocks like this, where I want to buy these stocks. But you could have so much pressure because the indexes start caving in. And so you shouldn't really look at that. You should just look at this chart in and of itself. But what I'm saying is that even though I thought that this was a signal, to put this into, the next high ground, that there's a lot of underbrush to clear out here. This is what I mean by nearby history. So you got to imagine this move going. So that's what I feel like gold is. Gold may be putting in a bottom, but in order to, to get going, it has to clear through so much history. So, now, let's see how this thing shakes out. I mean, you've kind of got this reverse symmetrical triangle. You broke out the top, and now, if you start breaking down into the triangle again and coming out here, it could go the other way. I still feel that lift is going to work out, that it's going to get going and work out. But it has to clear through all of this stuff. And that's what I mean by a clean trade. So to me, QuantumScape has cleared through all of that underbrush. and now it's just got nothing in front of it, but, you know, blue skies on the downside. So when I see something like that, I can just load up because I don't feel like there's a whole lot of risk there. Take a look at WRK, another stock that I've been talking about. So again, you know, you have this giant rotation, you know, out of growth and into value, into smaller stocks. So I feel like, you know, the easy money's been made in the stock market now. Now you have to find these buried, unsexy names that, you know, are value, are small cap, are a little bit under the radar. I think they still have some room to run, but I think a lot of these other stocks are going to run into, you know, a huge brush fire pretty soon. So, you know, we've talked about WRK. And again, what I look for is some kind of, let me take the whole screen here. I don't know where to put that. RG says, sounds like these stocks are trading a range before breaking out. Should we wait to put on a position before it clears? So, well, it's not a question of waiting. It's, you know, to me, it's, I wait for a certain bar where I can create a risk reward scenario around. So first off, you start off with a central premise. You know, when you look at a stock like this, you open up a stock, I mean, it kind of looks like this. You kind of make a case for it either way. But, you know, if you look clearly, you know, you can see patterns emerge. And to me, the pattern that emerges is this double bottom. And if a market has bottomed, it's not going to top here. So to my mind, by inference, if a market's bottomed, it's going to, you know, go higher. That's just the definition of a bottom. So you have a W bottom and you have a rounding bottom right here, and you have the neckline, and you broke through that. And then you have these kind of shoulders here. And so you cleared through that neckline, and then you broke out and then retested, you know, when you come down and you pretty much retest the neckline. And now you've just had this consolidation here, these inside bars. So these are weekly bars. So for 3 weeks, this thing's done nothing. So I've told our members this, and, you know, it's like, yeah, you told me about this 3 weeks ago, it's done nothing. Well, that's not how it works in trading, man. You could see a signal and the thing, you know, could go 3 months from after you see the signal. So you have this cluster of what I call inside bars. What I mean by inside bars is that the range, you know, from high to low, you know, each sits within each other. So you have 3 of these small little narrow range inside bars. So to me, this is what I call like the beach ball effect, you know, where you have this coil, this storing of energy, right? Where, you know, you put your hand on top of the beach ball, you press it lower and lower and lower, you know, and then you let your hand off the, you know, the ball. What happens? It just uncoils. The energy just releases. And so this is what this coil represents to me, that it's a storing of energy. And to me, it's going to release in the direction of the trend and the pattern. And so, yeah, I mean, you know, you could look at this thing going up and down on a 15-minute chart. 3 weeks later, you're saying, oh, the guy's nuts, I'm going to move on to something else. And then, you know, all of a sudden it's there. And that's kind of how it works in trading, you know. And a lot of people just don't have the patience or the imagination, or, you know, it's just a different way of, just a different objective. So to me, I don't worry that it's just been banging back and forth. In fact, the more it does that, the more the energy is going to release in the direction I'm looking at. So in order to catch it, you don't have to, you know, sit in front of your screen. You could just simply put a buy stop above these highs. I don't know what that is, 54.5 or something, and let the market do all the work. And guess what? If the market goes lower, you know, no harm, no foul. You're not triggered, and you know, you go and look for something else. So to me, it's kind of a set and forget, where I look at these patterns, I look at the setup, you know, I put my execution in there, and then, you know, and you put your stop loss somewhere here. So this is your risk, and that's your reward. And if you can justify 2 to 1, 3 to 1, 4 to 1, 5 to 1, you'll make a lot of money over time. So here's the statistics, right? So if you set up your trades with a 3 to 1 risk reward ratio, where let's say you risk 50 pips on a trade and your objective is 150 pips, that is a 3 to 1, where if you win 3 times your risk. You lose 50 pips. So if you do this and set up your trades with a 3 to 1, you can lose 72% of your trades and still be a winner. Now, this is in contrast where most people are in and out every day for 7 pips or 15 pips or whatever it is. But if you're going to, trade for 15 pips, you probably got a 15 pip stop loss. You're paying your broker 2 to 3 pips every time you trade. So every time you're out in and out 5 times a day, this is, 10 pips to your broker. And so this is a one-to-one relationship. And so now you need to be 80, 90% correct, carving out 15 pip trades, for the rest of your life to, be profitable. And then everyone wonders, well, why am I not profitable? Because you simply don't have enough of an objective on your trade. But if you're looking at a 15-minute chart, very difficult to see 150 pip move. You can go on my review website. There's just tons of people said, Mark, before I met you, I never made 100 pips on a trade. Because most people are trading for 7 pips or 15 pips. They buy these expert advisors. And if you look their take profit objective, it's 2 pips or 4 or 7. It's ridiculous. You can't, factor that in and pay the broker 2 pips and try and, scoop out, 2 pips on a trade. It's just a matter of time before you're going to, run off the road. So this is what I look for, trades where I can see something. I could see this thing going to a new high from 53 to 73 bucks. I could make that case. And so it's, it's worth the $4 or $5 risk to, make the next $15. And that's how I set up my trades. And if it doesn't work out, oh, well, I'll just go and find another one. But I just found 3 big trades this year. Lyft, the NASDAQ went down 15% and gold went down 200 bucks. So, people sit on these webinars and, it depends on, what week I'm talking about, what's going in the market. And this week is just back and forth. I mean, I've been telling you about WRK and we're still in the same place. So you're saying, well, this isn't very exciting. But, it's exciting when it's at 70 bucks and you've got a huge position on and you understood what your risk reward was. So in terms of FX, I've talked a lot about the yen pairs. It's kind of a tale of 2 cities where I like the dollar yen short. And, again, I don't know how to look at the euro yen. It's clustering up here. It's got a coil like WRK also, and it just looks like it's coiling. You can see we've got an inside bar here. This is an inside weak bar. Now, this could be a fake out, but I don't see it. So sometimes, when I think, that the market's made a top, I have to then imagine a sequence. So, I can literally draw these charts in my sleep or try and visualize. What I do is I try and visualize. I play, games around where things are and say, okay, if I think this is a short, there's no pattern here. I mean, there is a bit of, you could make the case, maybe this is a bit of a double top, and if it drops out of the sky here, maybe it would look that way. But, again, I'm going to wait and see what the market's going to do. Right now, we're just hugging this uptrend line. And it's just clustering. And the more orderly it goes, the more, to me, it indicates that the next move is going to be, here. So you have this inside weak bar where the high and low of this week, and we still got 2 days to trade. So we'll see if we end up being inside last. And so what I mean by inside, it's literally inside the range last week. And so it's the same thing as WRK. It's just coiling. And now the coil, now we have to figure out where's it going to uncork. And so, but, like I said, there is the resistance is, quite a distance away. It's, like the proximity. So you see with Peloton and Zoom, you've got clutter to the immediate, left of the move. But here, the clutter's, somewhat away, but these things will be, so this will be the next resistance level, whatever this is. This is 133 and then, 136. And if we get up here, then it's going to start negating the full implications. I think it already has. So this to me, was the governing pattern for a while. And then, at some point, these patterns just stop indicating what they were. They'd fulfilled the tenets of their move. And now, it looks like this. But this kind of looks like Tesla. And Tesla had a bad day today. So we could have the same thing where this looked like Tesla, you get a move, and then, maybe it's just a fake out where you get one of these things and you closes like that. And I can see that scenario. So I've been long euro yen, with one eye open because, these things still have to kind of prove to me that they can get through certain levels, to go higher. But if they do, these things are going to smoke. Either way, there's going to be a big move coming up in euro yen. If it tops, there's going to be a monster move on the downside. And if it goes up, similarly. So I think we're, just at this inflection point. And right now, I cannot see, anything that suggests that this thing is turning or going to turn lower. So one says, where's the best place to get started with buying and selling stocks? I don't know if you mean a book or knowledge or broker. I don't know what you mean, Juan. So somebody's saying this is not live. Dilshan? I don't know. This is pretty live to me. It is April 14th at 5:41 p.m. So you're entitled to your opinion. So one, I don't really give advice on brokers. I don't know where you are in the world. Just look for, regulated brokers wherever you live. Interactive Brokers is a huge broker that caters internationally. So thanks for that, Zoila. So Matthew said, as you said yesterday, Tesla went to the sky and is now bearish. So today, Tesla had a huge. So let me, people want to hear about some FX. I'll go back to Tesla. I promise. So euro yen is something that has been on my radar. I've been long euro yen with kind of one eye open, waiting to get for it to turn in my face, but it hasn't thus far. And actually, I have a pending order to buy more above this week's high, like 130.87. So I'm looking to buy more into the strength here. I think the dollar, is in a long-term downtrend, and now I think it's poised to go back in the direction of its trend. So this is the dollar index, and again, I'm showing you, a variety of trading instruments, and I'm looking at them through the same prism. I don't care what I'm looking at. You could put a pork belly chart in front of me, anything. If it has a high, low, and close and a pattern, you can discern behavior. So, and I was right on this thing. So right in the heart of the pandemic, when this thing started going higher, I said to our members, do not chase this thing. This is hitting a 42-year downtrend line. And maybe I'll show that to you tomorrow. And, I kind of predicted right there that this thing was, going to turn, and it turned right there. So when it did, it formed a, kind of funky double bottom and head and shoulders. And so to me, the long-term double top if I said double bottom. So this long-term double top, even though the tops are not in the same place, it doesn't matter. One could be higher, one could be lower. On the long-term thing, it looks like a big M top. And then you have this kind of double top head and shoulders. And then once it pierced here, then it indicated that we were going to go lower for a long, long time. So a couple of weeks ago, it hit this major support line. It had what I call an intermediate double bottom. And along with this pretty favorable price action when you made a new low, close on the high. So when I saw this, I said to our members, look, for the next couple of weeks, it's probably going to go higher to sideways. And that's precisely what we've done. And now we're kind of leaking back in the direction of the trend. So again, based on this governing price pattern. So this price pattern will govern or dictate the dollar probably for years. So, you know, every time it goes higher, you should do what? You should short it. That's what the implications of a governing price pattern. And so you can see we bottomed out right at a major support line, and it gave some support for a few weeks. This is a weekly chart, so each one of these bars, you know, is 1 week in time. And now you can see we're leaking back in the direction of the trend. But this is, again, an idea, you know, this concept of obstruction. So even though I think this is going to go down, you know, it has to cut through all of this history here. So, you know, you know, it is going to go lower, but it's going to go probably in fits and starts. So, but once you understand that, you know, you don't freak out that it, you know, kind of goes there and it's 80 pips in your face, and then it goes there and it's, you know, you kind of understand it for what it is. And so to my mind, you know, the best way to get short the dollar, buy the Australian versus the US dollar. So here is the Australian versus the US dollar. And I don't know where to put this. Again, for all of those of you who are non-believers. So here is the US dollar, the Australian dollar versus the US dollar. And so to me, this has an upside down or inverted head and shoulders. So this would be the left shoulder, the head, and then the right shoulder. But here's a little bit, something a little bit differentiated. The right shoulder is sitting a little bit above the left shoulder. So it creates this upsloping neckline. And all that means is that this is really bullish and likely to go much, much higher. So now you can see we're coming back to retest this neckline. And once we're through there, you know, I think that's what we're going to see in Australian versus US dollar. Could be a little messy for a couple of weeks, you know, getting through all of this history here. And that's what I mean, getting through the clutter. Even though I can see where this is going to go, you know, we're going to, you know, hit a few potholes in the road. But once you understand it, you know, and you get long Australia and it goes, you know, up for you and then now it's down 80 pips, you don't freak out because you understand that you're in the cadence. So this is, again, to me, it's understanding the cards you're holding. If you trade a 15-minute chart, it's arbitrary. Market can go anywhere in the next 15 minutes. So you kind of have this, you know, uptrend line. You broke it, was a fake out, and now you're going back in the direction. So you can see it stopped at a logical place. There was a massive amount of historical resistance here. The Australians came in and sold some bonds, and so you had this. So again, this is why, you know, I talk about these key reversals, but you don't look at key reversals in a vacuum. So just because I see this key reversal doesn't mean that I'm going to get short. There's not a pattern or anything within that key reversal. So in order to differentiate which reversals to take or not, I start with what is the governing pattern. So to me, this whole inverted head and shoulders is a bullish price pattern, meaning that on balance prices will go higher over time. So even though I see something like this, I know not to take it seriously. So as I said when we met, I think, I've kind of worked out how to view the market where I can both see the opportunity to capitalize on trades and also stay out of the way of, fake outs. And so to me, this is just a distraction. It just stopped the action at a logical place and, gave this thing, a chance to reload. So, I think it's just going to back and fill, and the more time it takes, like WRK, and you'll say like 6 weeks from now, that mark was, full of crap, because it's, really not doing anything, so it could go 3 months from now. But once I understand the trajectory, then I try and just get in sync with the trade and, let it take me when it's ready to go. 73.50. So Daniel asked you, is it a buy at 73.50? Yeah, if you can get that kind of pullback. So if you can get a pullback here, maybe. I just, you may not get that chance. So I feel, and I told, guys on the webinar not too long ago, that this guy right there was going to be, govern how low this thing went. So you can see we came almost to there, but didn't take out that low, and then we went back up. So sometimes, I'll look to the left of the chart, and there's something that, like Tesla. Tesla told me there was a bar all the way to the left. So there was a bar like this on Tesla. And even though Tesla went lower, it eventually went higher. So, it's hard to explain everything that, I see on a chart. But I mean, kind of looking at these things for so many decades, I kind of feel, I understand what I'm looking at here. ACs, can you give me your comments on dollar yen? It was bullish since January. It's now reversed to bearish. Yeah, I did a whole big presentation on dollar yen yesterday. And, these yen pairs have got me kind of crazy because I was feasting off dollar yen for a long, long time. I showed you the double top, head and shoulders, previous to this in 2015. But frankly, just looking at this, you can see that we've been in this huge descending triangle price pattern, this sawtooth. And, recently we got above it, but it looks like a bull trap that anybody who chased that breakout. So sometimes we see, little breakouts, above, these lines, which are, I won't say arbitrary. I mean, this is a downtrend line, but you have to look at the pattern. Now, when this thing started taking off, I said to myself, is this a paradigm shift? Is this going to break from, a stronger yen to a weaker yen? And I couldn't make the case for it. And it's kind of a, twisted logic. It's just something that I just feel that, the true opportunities in life, we don't get them that many times and that often. And I think that applies to chart patterns. So, if there's a true opportunity like Lyft made this huge double bottom and then it took off. It didn't just, hang out here, form this double bottom and then, do this and then that and that and that, and put, multiple lows here and give us, 14 chances. It gave us 2 chances, 2 big chances, and then it just went from 40 to, 65. So, markets will make a double bottom. Maybe they'll make even a triple bottom, but eventually if they make a bottom, they're going to get going. And the case I'm trying to make is that if you're going to look for something that is going to, have a sustainable rally to it, I don't think it's going to start with the market that gives you 14 chances over 4 years. And so that's why I was, even during all this upthing, I didn't think it would be sustainable, which to my mind now suggests that, yeah, there's another huge opportunity to short dollar yen. And frankly, every time this thing has rallied, I've shorted it. And the only reason I haven't done so this time is, again, you can see in order for me to say, to short it, I have to see, is this going to do that? It probably could. I mean, this thing's been dancing around for so long that if it, goes back into this thing, it probably could do it quickly. So this is kind of this concept of, obstruction, where if I get short here, I've got to, clear through all of this history that's nearby. So whenever I see kind of a big move and then perhaps a reversal move, I like to see what I call the concept of spacing, where it builds space away from this primary move so that it can fall. So let's say we assume this thing is, topped here. I would like to see it kind of build this space. And then if I saw something like this, then I could picture this going in. Right now, if I get short here, excuse me, I have to say to myself, this thing's just got to collapse right through all of this stuff. Maybe it could. I mean, you see these things, do this. But so I'm kind of just sitting on the fence, kind of seeing what this action is. I'll get in. I mean, I won't let this thing get away from me. But I just kind of want to see, perhaps a little bit more action in here. Again, build this concept of space. The more, but if this starts re-entering the atmosphere under this thing, and then kind of doing one of these, then that's kind of what I would look at visually. So, and I play these visual games all the time on these charts because the charts have a certain aesthetic, and I showed you, right here at this double top, once I knew what the game was, meaning that, this was just a pattern of lower highs. So to me, this was just a continuum of lower highs and, implying that there was a high at that level. And since we, so once I saw this triangle forming, I just felt like we had to hit this area many times. That's the definition of these descending triangles. It's a sawtooth where it goes, in lower highs against a common low for a long time. That's what a descending wedge triangle looks like. So once I kind of understand what the, what's going on here, so right in this time frame, I showed you a bunch of trades that I made a couple of years ago, where I was shorting at 111.61 right there, and that was my take profit. It was right in those lows, around 104.5. I put it a little bit above there, and I made a few bucks. And I'm looking to reload on this thing if this, looks like it's sizing up, which I think it is. To me, this is just, the dollar yen has been in a huge, I showed you the 43-year chart where dollar yen has descended from 350 and it's now trading at 110. So we've been in a decades long, downtrend. And, the question, open question was, now is something going to happen to change that dynamic? I mean, with all this quantitative easing and all this stuff going on in the world, things can change. But you can see now this looks like it's coming back, right back into the atmosphere, and that's going to be, a bull trap up there. So I think there is going to be another dynamic opportunity. But, right now I'm seeing like euro yen kind of going higher and dollar yen going lower, and so you've got to look at each chart that's distinct from each other. Gold is not silver. Rob says, do you see support for pound New Zealand? So this is, again, pound New Zealand is kind of heading back into, so this is where it kind of gets a little bit dicey to try and sort out what is the governing pattern. As I told you way back here, when I saw these bottoms, to me, this double bottom was going to govern or dictate the future behavior of this thing for a long time. And for 5 years, it went from 165 to 218. So when I spotted that bottom, that was a bottom for that time. Now you have to say to yourself, if this is a sell, then it's got to clear through all of this clutter. So now, and that's the thing you say to yourself, okay, and so this is the problem when you're looking at it on a 15-minute chart. It could look really good. It has a double top. It has everything you're looking at here on a 15-minute chart. But this is a weekly chart. And so now you got to say to yourself, if I get short here, then I got to see, I got to visualize this kind of going through all of this stuff. And so I think it's a hard trade either way right now. This thing always finds a way to go higher, but this was just hit this shelf here and had this kickback. So I think it's just in the middle. It's just a tug of war. And so this is the contrast. So if you want to go short this here versus like QuantumScape, which is relatively down here and ready to break out to the next level, which is easier? And so this feels difficult. It feels like it's going to be difficult on the upside. It's going to be difficult on the downside. So I'm just going to leave it alone. I got into 192, 193, got a push to 196. I actually added up there. And then I got out, basically even. And so, I'll just wait for another setup, up or down. I still feel this is in a bit of a stealth bull market. It has been going up over time. So if we came all the way back down here to, below 190, maybe we could be looking at, something like this. So this is it's tricky right now. So I'm just looking, I just look for simple trades. If this gets, more complex, it didn't work out, oh well. I'm moving on to QuantumScape now, which looks a lot easier. So why drive myself crazy with the same thing? So that's the thing. I think maybe some people just get used to the same thing. They look for 15-minute patterns, maybe on the same instrument. I'm kind of always shifting to where that next opportunity for that clear path is. So, I was trading Zoom. I was making a fortune just banging, every time it got to 330, then it dropped to 310 and I shorted back at 330. And, I was playing that game for a while and now it's got this huge key reversal. And then into tomorrow for Zoom, like what I hope for these reversals like Tesla and Zoom, certainly Zoom, is that if Zoom like opened $3, $4, $5 higher, I would just short into that, using that key reversal bar today as, my anchor. And so that's what I do. I use kind of the prior day, if you've had a huge reversal. Now you have to understand, which way you want to face. And then I will I'll play that game in Zoom. But to me, QuantumScape feels like a laydown. It just feels like it's ready to go. Ainsley, how do I get your weekly updates? I'll include that at the end, Ains. But thank you for asking. So Daniel says, has Pound New Zealand retested the neckline? So it's a good question. And this is what Daniel is asking. So, here's where the market throws you a whole bunch of patterns and you have to sort out. And this one particularly is challenging because to me, where I come from, for the last couple of years is that I've been trading off this double bottom rounding bottom, and then saying that this is going to govern or dictate the price of, and you can see it went from 165 to 218 and it did its job. That pattern did its job. Now we have to say, which is the new pattern that's thing. And I think what Daniel's saying is that here you have a head and shoulders. And, we can draw the neckline here or maybe a little bit lower. One's aggressive, one's conservative, but, we're right at, I guess, that first level. And so what Daniel's saying is this kind of a head and shoulders that now, if it is a head and shoulders, then that's what we should, expect. And that could well happen. I'm not ruling it out. Why I really thought this thing could turn into, a big move was that what happened here is that you had this monster head and shoulders, which implied, a huge down move. So once you triggered this neckline, this is what you should have seen. If that's, a bear price pattern, when I look at these patterns, then they should do what they, suggest the implications, that they, so when you see a head and shoulders, this is a bear price pattern. That indicates a down move. But what happened was we just broke the neckline And then we were right back, above the neckline. And so this to me felt like a trap that, it looked like a head and shoulders, but then you put this double bottom on. And so to me, I would have to see this thing taken out. You take this out, then, I'll be open to it. But right now, every time pound New Zealand looks like it was coming down, it put on these things and, figured a way to, get going. But this does look pretty bearish. Right now, this looks pretty ugly. But, now I got to say to myself, should I get short here? And then, if I get short, can I see a path clear? So I've got to probably take a 80, 120 pip risk on, pound New Zealand, and then I've got to see myself clear to making a 250 pip move here from 193 to 190. Maybe it doesn't. It just doesn't feel super clean to me. So, I'm just now going to leave it alone. It's always on my radar. And, I'll wait for the next kind of setup. Even on the monthly, there's still, you got to get through so much. So the monthly is really, inherently very bearish. This thing's been in a long-term downtrend for a long time. So this is the monthly chart. And so, we're here for the month. Now I try and draw in my mind, are we going to be down here? Are we going to cut through all of this stuff? I don't think so. So if we're not going to go down, then we're either just going to hang out here or find a way to just go slightly higher. I don't know. It's not clean in here. It's just a mess. So this clearly is in a long-term downtrend. But, over here, this was the weekly pattern that I saw at 165. So you have a double bottom on the daily, the weekly, and the monthly. The rounding bottom, the thing. And so that's basically, we put in that bottom. But, we really have never been able to get going on this thing. We made one push and now it's leaking again. So now do you say, do you see this going all the way to new lows? It could. It could, but it's got to now cut through all of this obstruction. So you have all of these reversals here, and these are monthly reversals. So when you see, key reversal, it made a new low, close on the high, in these two guys, is this going to go through that? I don't think so, but we'll see. It's just a mess right now. So let's just see how it sorts out. When something gets really clouded or ambivalent, I'm not going to fight it out. I'm not going to now flip to a 15-minute chart, look at some Bollinger Band and try and carve out the next 50 pips before it goes the other way. I'm just going to leave this alone and go and play somewhere else. Olu says, thank you for what you're doing. What's the approach for spotting good patterns considering there are thousands of instruments to choose from? And there are. That was the nice thing about being in the FX business. I had to look at, 15 charts at the end of the day. And, I could do that in 10 minutes. I just go down my roster, look at all of these currencies, these indexes and gold and, call it a day. But, the stock market, started getting really active last year. And I actually love trading stocks. There's just tens of thousands of them. So, there's just various ways of finding them and going through them. And, you can then bunch them into tech, into sectors, health, tech, growth, value, put 5 names in each pot, and kind of watch those names. So, I watch, bank stocks and health stocks and, REITs and, all kinds of stuff, and so, for my conservative stuff, I'm just looking for really stable stuff that'll give me, a good return, like IYR. It's a real estate REIT. You can see it double bottomed. It has not gone to its pre-pandemic high. I think it'll get there. We have another about 6% to go. In the meantime, you get 3.5% on your money for hanging in here. And I can't see a path for this thing going lower. So I don't think there's a lot of risk. So while I hang out in this thing, I can get 3.5% return. So that's for, kind of my stable money and, my, safe money. And then the stuff that I, like to pound away on, I look for things like, Lyft and, You know, KTOS, I'm starting to look at it again. It kind of had a mini breakout today. And I think these smaller stocks are going to be, you know, where the next action's at, you know, and then it's just going to be a rotation. And then, you know, everything's just going to probably, you know, get hammered by the end of the year. So this is KTOS. Yeah, it's right here. This has been on my radar. I made some money a few months ago on the options. No, that was too big. So this has kind of been meandering, but you know, this actually has a solid weekly chart too. So, you know, I've been always looking at this on the upside. Then I saw this pattern. And then recently, you know, I've been seeing this triangle, and you can see today we had, you know, kind of a mini breakout above here. So, you know, this pattern, you know, is kind of either a reversal or a continuation. And to my mind, it feels like it could be a continuation. So you have this double bottom price pattern, and now you're starting to poke your nose above this pattern. So, you know, I have a feeling that, you know, you could, you know, see a move out of this. So I look at, you know, stocks I look at charts all the time. I find them all over the place. You guys bring me charts to look at. And so I was just looking at some YouTube comments here. Yana says, would you consider the NASDAQ, a reversal bar? So I think we are very close, if not there already, to a sizable top. Now, I don't know if it'll translate, you know, all at once. I mean, I made a really good move 2 months ago on a thing. And so I don't know if, again, I do think that when you see a reversal like this, again, you can't just trade reversals in a vacuum. Just seeing that first reversal, you know, that could be the first, but, you know, market is just not going to. So it's the same thing, this concept of obstruction. When, you know, you kind of go straight up, you don't go straight down against that. You have to, you know, right in here, you can see you built out kind of a mini pattern. You went up, and then you built it out so that you could fall. So, you know, I have a tough time kind of training, you know, explaining something that you see visually. But yeah, I mean, again, and when we look at the weekly, this is not a secret. Whenever markets come to major level, they don't just cut through like butter. You know, they always have a stall out here. So whether this is, you know, going to translate to this right now, I don't know. You know, this still looks like it's a pretty strong market. We'll have to see how we close on the week. So you can see on the week, if we, you know, have a, you know, huge reversal on the week, then you can see we've got these two reversals in the same neighborhood. And then maybe you could say there's a start of something happening here. But, you know, the case that I've been making for weeks and weeks and weeks is that these, you know, these indexes are driven by, you know, a handful of huge companies: Microsoft, Google, Facebook, Amazon, Netflix. And though, you know, those companies are making money, and their charts, so they're holding up the indexes. But underneath the indexes, the QuantumScapes, the Snowflakes, the you know, DoorDashes, the, you know, all the Zooms, the Pelotons have crashed. They're 30 to 50% off their highs, even though the NASDAQ's at a new high. So, you know, the index are somewhat masking what's going on here. So it doesn't matter what the market, and that's the point. You know, it's like, despite the fact that the NASDAQ has been going straight up, I've been making a fortune on stocks like Zoom, QuantumScape, Snowflake, just selling those based on very bearish price patterns. You know, all of the EV stocks, Plug Power, F-Cell, they've all crashed 50% off their highs. So this is why I say, the close is so important to me. So right here, a couple of months ago, where I saw this weekly reversal where it made a new high and it closed at the low. But as I say, you can't just trade, these things in a vacuum. You had a huge reversal here and, you still went on, made new highs. So it was that this thing was trading within the cadence of a, trying to find a contrasting color here, an ascending broadening price pattern. So it was more profound on the daily. So you had this key reversal at the top of an ascending broadening price pattern. And based on seeing that, I just bought a whole bunch of put options, which is a bet on the decline. And you can see the week following, I made a bunch of money. Then the week later, I reloaded and I made another bunch of money. So it looks pretty small on this, but all told, it was like a 15% move on the NASDAQ. And so I used a combination of just patterns and price action, everything that I'm telling you, to make a bet that resulted in, a nice chunk of change. So this is what I was looking at. On February 19th, I sent it out to all of our members, this chart, saying that, we're likely to get a reversal here. I started buying some put options on the QQQs at 320 for $1. Bought 350 of them. So the underlying is based on 100 shares. So it cost me about 35 grand and ended up, making about 200 grand in 2 days. And I did this on 2 accounts. So made close to $500,000 in 2 days. And then reloaded the next week, bought, 450 of these 307s at 70, at probably $1.50 because I was losing half my money at that time. I probably paid $1.50 for those. And then I was losing, a whole bunch of money. By the next day, they were trading at 266. And instead of being down 30 grand, I was up 60 grand on them. And then they went to $7. So I made about 500% on my money, 2 weeks running. So, again, this doesn't happen every week, but if you have the tools, and this is really what I try and share, if you understand what you're looking at, there's opportunity to be had. Not every day, it took, months and months for this thing to set up until, there was a chance to do this. So it's going to be very important how we close. This bar is going to look, very different if it looks something like, this, or if it closes, somewhere up there. So, but then again, I still got to, imagine that even if this is a top, it's got to, cut through all of this stuff. And, maybe it can, maybe this, works out to be an area of a double top. So we'll see. But I think we are very, very close to redlining on this market. It's just been going up so it's discounted just about every good piece of information out there. And so I think, we're getting pretty close, but at the same time, I can't see a path lower. So if I say, okay, the S&P is, topping out, and this is the value of looking at a weekly chart, because if I drilled it down to a 15-minute chart, I may see a double top, I may see a formation, and it looks much sexier than this one does. Because now I got to say to myself, okay, I'm going to get short here. And so now, do I see this thing just doing this? Cutting through all of this, history. Not so sure. But the more this thing pushes, the more it's going to build pressure. So this is kind of building this kind of ascending triangle. And you can see it's right at the top. So this is the juncture where I saw the NASDAQ 2 months ago and bet that it was going to come at least to the lower end, and made 7 figures on that bet. And so I think at some point you're going to come to this lower level. What's that? 41 to 3,900. And you're right at the top here. So maybe if you have a little narrow range bar and this finishes this week, I would just put a sell stop underneath here. If it keeps going, oh well. If it comes through, it probably will fall. So we are kind of getting close to, I think, some red line levels on these indexes. Now the Dow has become the new NASDAQ. This is where I think, it's less vulnerable to a big sell-off. I think this is where, if you're looking to harbor some of your safer money, you want to look for cyclicals, industrials, very unsexy names, Clorox, Procter and Gamble, just not, so this thing is the new NASDAQ. This is, kind of been, well, it's also pressing some very high levels, but at the same time, just very hard for me to imagine this, it kind of going through all of this, unless there's some, catastrophe or some catalyst. When I look at this, these guys are very powerful. These key reversals, you can see that every time this thing's made a reversal, it's made a push to a new high. So now you got to say, do you see something taking out all of that? I don't know. I don't. So it's one thing to say, wow, it just feels like the markets are, at a major level. But then, you got to see something that will translate to a move. So even here, when it topped out here, it did build, some kind of mini move for this to happen. This doesn't just happen like that. Edith says, I cannot see your graph at the left side. I'm not sure what you're talking about. Mark says, should we look at breadth or advanced declines? No, I don't look at any indicators. This is all I look at for every chart I look at. Price and time. That's it. I just look at these pictures, and from these pictures, when I open this, I go, okay, what is the condition or phase that this market is in? If I asked a 6-year-old, what's this market doing? Well, it's in an uptrend. I mean, maybe you get a pullback here. That's about it. So once I open something up and I say, okay, this is a trending market, now I've got to figure ways, how do I get in, involved in this trend where I can understand risk and reward. And then I just look for patterns and price action that puts me, so, now this is an uptrend. So you just want to get in sync with the trend. Now, if trends end, they put on some kind of pattern, some kind of head and shoulders, a double top, whatever they do. If they does something like this, then you can see something like that. But there is no pattern. There is no price action that suggests that this thing is coming down. Yeah, Kevin, I look at the IWM. That's the small caps, the Russell. So I look at all of these indexes, and same with these indexes. I can't see that this is a short. I see these two huge reversals here that are going to kind of keep this intact. Yeah, you could say maybe this is tracing out of head and shoulders, but these guys are like soldiers at the gate, just ready to stop any kind of down. So these markets still look, it's you could say, well, maybe we're tracing out a bit of a head and shoulders here. I don't know. Ron says, do you trade Apple? Yes. What you're looking at the stock. So, Apple is, so those are the stocks that are leading the NASDAQ. That's why the NASDAQ is at an all-time high, because, Apple, Facebook, Google, these are strong stocks, and they're in strong secular primary uptrends. So that any pullback, is probably, a buying opportunity. So you can see these are the guys, these are the soldiers at the gate that are, standing in the way of any kind of decline. So this is just, an uptrending stock. You're sitting on this trend line. Maybe you get a pullback here, but, this is a stock that, is just been going higher for most of its history for the last 10 years. Same with, Microsoft. These are stocks that, are very different from Zoom and Peloton. These are stocks with, great earnings at favorable multiples, 28, 30 times. Or Zoom and Peloton, I don't even know if they're earning money. So it's a, you know, in my newsletter a couple of Sundays, I said it's a tale of two markets. You know, one market, you know, is going higher. Microsoft is, you know, is probably one of the best companies you can own. And Zoom is going to go the other way, and QuantumScape is going to go the other way. So to me, it's not a stock market. It's a market of stocks. There's a bunch of stocks that I like long, and there's a bunch of stocks that I like short. So Philippe says yesterday, SAP had a really nice setup to the upside. I intended to place a buy stop early, but then the market opened higher. Sorry, excuse me. Should we place orders before the market close to avoid this? So I don't normally recommend chasing stocks. So sometimes, you know, you'll see a stock and then it'll just gap open the next day. And then you have to make up your mind, you know, if that gap is worth chasing. If, you know, if it's in an uptrend and, you know, it's just gapping in the trend. Let me just look at SAP. So yeah, so you said the market, well, it looks like the market, so here it gapped, I see where it gapped higher. You know, so sometimes, yeah, so it was like, yeah, the day before last, I was short Zoom. It opened $5 in my favor. It opened $5 lower, but by the end of the day, it came almost back to unchanged. So it kind of reversed. It had a mini reversal. And this is probably where, you know, I lose some objectivity. You know, even I do. You know, I'm so intent on shorting Zoom that I knew when it closed higher, I covered half my position, but in my body, I knew I should have, you know, covered the other half. And then it opened, gapped higher, and just kept going. And so in this case, SAP looks like it's trending higher. So if it comes out of this little thing, and, you know, so the same with Zoom yesterday. It's like sometimes it's like you have to say, well, even if I buy it, your concern obviously is where's, you know, the risk. So if you wanted to buy SAP here, let's say closed here, and you're looking to buy the stock, and then the next day it just opens higher. And you say, well, you know, do I chase it? You know, what's the risk? So to me, you know, I would buy these things only because, again, it comes down to a visualization. It's all about, okay, your fear of not there is that, you know, it's like, it's going to, you know, you're going to lose. But then you have to say, okay, if I buy it here, now let me draw a chart and see, do I see this stock doing that, coming through that, cutting through, you know, the last couple of days of thing? So probably not. So I play all of these scenarios where, you know, the day before on Zoom, I knew I was in trouble. I just knew that, you know, I needed to get out of that trade. I was on the opposite side. Instead of trying to buy Zoom, I was short, and it gapped up on me. And I knew that because I couldn't see it coming back down that day. So I was short, if, you know, so I needed to come back down in my favor, and I couldn't make that picture in my mind. So I don't say that you really should chase stocks. But something like this where, you know, it's got these higher lows, and if you're looking to buy it, you know, buy it and then, you know, put your risk somewhere here. It's not a big risk. And, you know, then you've got a favorable risk reward. So, you know, when you're looking at something, you're always worried about the risk. And so what I always try and do is draw that risk in my mind and say, can I see this thing, you know, and I actually draw the opposite side. So now that I'm in QuantumScape, you know, I try and say, you know, I try and picture a move, you know, and I can't make the case, you know. So if you can, you know, get in here and you know, you can't make the case that the stock's going to drop that day, then, you know, you make the decision to get in. But ordinarily, I would say don't chase, you know, don't chase stocks. I mean, don't chase gaps. You know, some work out, you know, you just do it here, and then some, you know, you buy it here and it closes there. So it's you know, it's very dependent. And it's all about risk. So if you're concerned, then just take half the position that you thought about to even lower your risk, but, you know, get in the trade you wanted to. So Dan says, can you look at position size? All right, so why don't I finish off there, because I think I talked about risk management, and that's really what it comes down to. It's really sizing your positions for a, you know, for a given risk level. So I always say that you shouldn't risk. Sorry, I'm trying to find these. And I'll just put this. This is a position size calculator, and it's exactly what it sounds like. So let me just bring this over here, and then I'll end with this. So most people are, you know, taking too big a risk. They're trading unknowingly, trading 2%, 3%, 4, 5% on an individual position. And so, you know, if you lose 10 trades in a row, 3%, you've lost 30% of your account. Now you need a 60% just to get back to break even. So what I say is that you should risk about 0.5 to 1% on your trade. So this way, you know, if I send you 5 bad trades in a row, you know, got stopped out of Euro New Zealand and, you know, Pound New Zealand and what have you, 5 bad trades, you've lost 2.5% of your account. And then on the next trade, I could make 15%. So you've lost 5 out of 6 trades and you're still a winner. But what most people do is they trade too much. They risk too much on each trade and then eventually just get worn down to attrition. So here's where you pick your currency pair. Go down here and you find all your currency pairs. I'm looking for the, there it is. So, you know, the other day I put out a Euro New Zealand trade. I don't know what the stop level was, but so this is how you would set it up. So you can, wherever you are in the world, you can use this calculator. For the sake of this, I'm going to assume a US dollar account and a small account. People say, well, I can't trade the way you do because you have a big account. But guess what? 0.5% risk on a $2,000 account is the same as 0.5% risk on a $20,000 account. It's the same as 0.5% risk on a $200,000 account. It's 0.5%. So people really get stuck here where they think they can't be in these bigger trades because they don't have enough money. The problem is they're looking at taking these bigger trades with the same size positions that they're used to. And so if you're going to look for a 300 pip move on Pound New Zealand, there's no way you're going to get there with a 30 pip stop loss or a 15 pip stop loss. And so people think, well, I can't take 60 or 90 or 120 pip stop loss. Well, this calculator shows you exactly how you actually can. So it really doesn't come down. It doesn't matter how big your stop loss is. 120 pips, gargantuan. But, you know, if you determine that whatever that stop loss is, it's only going to influence 0.5% of your account. So then you come and you either do micro lots or mini lots. So you have to put your contract size here. Let's assume a mini lot trading account with 2,000. You hit calculate, and this tells you that you can put on 0.117 lots to trade the Euro New Zealand dollar with a huge stop loss. 120 pips. I think I had 120 pip stop loss on a Euro New Zealand trade this week. It got stopped out. I had a 0.5% risk. Guess what? You lost $10 out of your $2,000 and you live to fight another day. And so you can have 5 of these trades. You've lost $50 out of your 2,000. So it doesn't really matter. If one day, you know, you see me put on a trade for Euro New Zealand dollar and I say, you know, take 187 pip risk. It looks, you know, crazy. But if I'm trying to take 600 pips out of the market and I want to stay out of all of the noise, that comes along with it, you can do it. It just means you trade a smaller lot size. And then guess what? As the trade moves in my favor, I start adding positions. But, then the new position, comes where you already have profits, and then you keep building into the momentum of the move. And so if you catch a big ride, this is how you build your account. But if you trade in and out, 5 times a day, eventually this thing gets whittled down because you're paying your broker all the trading fees. So I think I put it in there. So AC, I talked about the dollar yen. It's been in a long-term downtrend, and I think that it's probably likely going to kick back into the downtrend. Mustafa says, can you do quantum size on this? No, this is just for currencies. So really what you have to say, like on QuantumScape, if you want to trade it, is you have $10,000 in your account. And this is a $40 stock. So you say, well, what is a 1% risk on $100? And sometimes, if I really like something, I'll say 2%. If I really like something, I'll start with 2%. If I really like something, I actually, I don't even calculate it as a percentage of I just look at it and I just, for me, there's not a whole lot of risk here. I can't really draw that. So let's, on $10,000, if you take a $200 risk, then you could buy 50 shares or sell short 50 shares of a $40 stock. You understand that, Mustafa, how that works? So if you, I think that's right, 50. Well, 50 times 40. That's actually $2,000. So, but the point is a $200 risk. So if you sold this at $40 and you say, I'm going to, risk, 2% of this, put a, 2% bet, whatever you think your, the risk is here. If you think it's going to, your risk is $45. So then that's $4. And then if you want to risk $200, you have to do, do enough shares where, your risk is $200. So let's say you get into 41, you put your stop loss at 45. That's a $4 risk, right? And so if you want to limit your risk to $200 on a $10,000 account, that's how you would do it. Daniel, you. Sorry, Victor. I've already done the Australian dollar, US dollar. This is on a YouTube streaming, so you can catch it, and watch it again. But I really want to thank you guys. I'm trying to share with you, my approach to trading, looking for sizable gains in the market, also kind of stepping out of the way of, certain landmines that the market is very good at laying there. And, trying to identify the moves that are going to carry you a long way. And to me, I started off with QuantumScape. I'll finish. I think that this is a very bearish price chart. This tells me the stock is going to go lower. The stock tells me that, a lot of the risk has already been taken out of it. And, I already have some put options betting on the decline. And tomorrow I will heavily short this stock. Mustafa, you're always welcome. Thank you. So Raj says, on QuantumScape, what strike and expiration? So I bought expiring this week. I bought the 41 strike. So I'm just a little bit in the money now. You can see it's under 41. So I don't know what I paid for those things. I showed the graphic before. I was losing 50% because I think I put it on somewhere in here. And then, time just whittles down the premium. So I think I paid $1 because, I could see I paid $10,000 for it. And then I was losing $5,000. I was losing 50% of my money. And then today it, went into the money, and I went from a 50% loss to a 50% gain. And that's the beauty of options. It's you risk losing everything, but you can make 3, 4, 5 times or 7 times. Recently, I've made 7 to 10 times my money on lift calls, on NASDAQ puts. So you have to be very correct about your timing, because the time value just eats away the premium. The more something, it can just sit there. Even if it doesn't, move, it just eats away your time value. And that's what happened here. I got in early, and I was losing 50% of my bet. And then all of a sudden this thing, went in the direction that I anticipated. And, now the deeper it goes under 41, the more money I'll make. But here's the game of chicken. They expire on Friday. So the calculation is on Friday. On Thursday, do I hold it into Friday? Because any move higher just, wipes out 50% of the premium or 100%. So I'll probably look for a push in tomorrow, take some of the chips off the table and, see how we close. And if we close badly, then I'll hold it into Friday too. John says, thank you, Mark. Great stuff. You're welcome, John. Jess says, thanks, Mark. Another amazing webinar. You're awesome. So really appreciate that. Edith, I'm sorry, I get so many questions. If I didn't answer some of your questions, it's just, I'm not ignoring you. There's so many that comes through. Thank you so much for your time. Zola says, I'm a complete newbie, but I'm learning a lot. Thank you. So I'm just looking through the comments. Henny De Jesus says, thank you, Mark, for sharing your knowledge. I've now changed the way I see and do my trades. You've given me confidence. So if I've had a little bit of input and value in your lives, then that's what really gratifies me. I'll share once again the link if you want to join my elite program. I will put the link in the thing, and there's a video. It explains everything, and then if you like it, then one of our team members will contact you. If you send an email to me and say, let's do this, one of our team members will reach out to you, and then you will actually speak to one of our representatives. And so you'll fully understand everything that we're offering. And if you like it, then that's be happy to have you join this elite group. We don't advertise this on our website. I don't market it, because you can't just buy it off a website. You have to talk to one of our representatives to make sure that you're suitable for the program. So John says, another great class. Thanks, Mark. Levi says, do you short the options always, or do you wait for the time when they expire? So I don't know what you mean by short the options. So if I'm looking to bet on a decline, I buy a put. If I'm looking for something that's going to go up, like Lyft a few months ago, then I'll buy a call. And then sometimes, like I said, it's a game of chicken, how long you want to hold it. So in the case of Lyft, I bought the $46 calls at $1, and the stock was trading at 45. By the end of the week, it went to $53, and I just put a limit order on my options at 7, and it ticked me out at 7. So what I paid 1 for, I got out for 7. So I made 700% in about 4 days. So it really depends on the price action. I think I paid $1 for these options in QuantumScape. $41 calls, puts. I'm sorry. So the $41 puts are trading at $1.40 by $1.60. So I'm making about 50% on my money. Close at 150. So depending on how this stock now performs tomorrow, if it has a swift move lower, I'll probably dump some of these things, take some money off the table, and then leave some into Friday if I think that this thing still can go. But all you need is one Friday where it just stalls, does nothing, or goes higher. It just your premium gets really shaved. So it's a very tricky game to play. It's really a function of where you think something's going to go and what the risk reward is. So, all right, I'm going to leave it there. Rob says, I've made over 20% on my account over the past few weeks learning from you. So that's fantastic, Rob. That's fantastic. So I'm glad that I can share. I've been, staring at these screens for a long time, and that's why I started the Pattern Trader, just to share what I think I've learned. I think I can add some value. I see so much nonsense out there that that's why I decided to finally do it. Anyhow, thanks a ton. And, tomorrow I'll give you a link if I'd like you to share whatever, your value, whatever in fact, I'll put it, if you want to put comments, then we have a link. So Rob, if you would like to share, or anybody else, I would really appreciate you, good or bad. And then you can explain exactly, why you had a bad experience or a good experience. I think before I go, actually, what I want to do is show somebody put a negative comment on, and that's fine, on our review website. So somebody put this: I've been following Mark for a month on free webinar, been very keen on his predictions. I've gone ahead and put my bets to short the NASDAQ as he keeps saying it will drop by 20%. So doesn't mean, so it did drop 15%. I took $1 million out of it. So I made that bet. Now sitting on a huge loss as the NASDAQ is going completely in the opposite direction. So I didn't say that it was going to stay, lower forever, and it did what I wanted to do. So I can definitely say Mark's predictions are just made up stories, and one should not follow Mark and closely understand economic impact to the NASDAQ. So from my experience, I wouldn't give my money to Mark, not to mention that I did raise this with Mark and his support team. Again, I don't get these things, so I don't know my support team. So we basically said, thanks for your feedback. Totally understand your frustration. I'm wrong more than 50. But really, again, I shorted the NASDAQ. The NASDAQ went down 15%. I made a ton of dough. And now the guy's saying, well, now the NASDAQ went and made a new high. Well, that was then and this is now. So again, you can, can't please all the people all the time. He says, and then I went on to say I'm wrong more than 50% of the time. The trick is risk management. You should only risk 0.5% to 1% of your capital. You can't base your entire experience on one trade. With regards to NASDAQ, I exited that position several times and made a profit and covered my position. If you aren't a member, you may have missed the alerts when I was covering. The live webinars are free and available to anyone, but only members get the daily email alerts of how things are moving. Our members get 3 to 5 trades per week. You shouldn't put all your eggs in one basket. So that kind of puts things into perspective. All right, with that said, I'm going to love and leave you, and I'll see you tomorrow for the last get together. So thanks again for. So Centra says, I'm driving and listening to the presentation. Is this, so it's on YouTube being live streamed. So you can catch it on YouTube. All right, guys, thanks a ton. Let me put this link in YouTube also.